All right, GM everyone, welcome to Apyx Office Hours number 15, entitled Protocol and Market Update Part 2. This is the second part to our protocol and market update that we did earlier this week, where, as the title indicates, gave just a general update as to what's going on with the protocol and some insights into the market. As usual, we're going to use this as an opportunity for existing and prospective protocol users to submit questions if they have them. So, of course, please don't hesitate to drop your question on the pinned tweet on our profile, and we'll do our best to get to them. We've got a few questions here to throw Parker's way. Questions that we were able to just kind of pull together over the past few days, some of which were based on just general Discord community activity. So yeah, with there, we can go ahead and jump right into it. GM Parker, how's it going?
GM, pretty good.
Cool. Well, we've got almost another week under our belt of what has seemingly been the longest. I don't know if it's the longest per se, but stretch, no pun intended, with STRC trading below par or depegging, not depegging, but slipping meaningfully below par. So would love to actually, you know what? Before we go into just kind of picking your brain on like the price action for Stretch and maybe even Bitcoin over the past couple of hours, it was announced earlier this week that actually you have joined Apex full time. I think a silly assumption that we have here at Apex is that everyone knows you from DFDV. Um, it would be great maybe if you don't mind just giving everyone a quick rundown of like who you are, where you come from, all that good stuff.
Sure. Yeah, so made the announcement earlier this week. And, prior to this, we were all technically working on Apex on kind of a part-time basis. We do have some full-time folks. I think Dawson, many of y'all have met, and then we do have an engineering team and a product design team as well. But for all the rest of us, we spend quite a bit of time working on DFDV, which is a public company traded on the NASDAQ. Um, so, a little bit of the backstory. I've been in crypto since 2017. Started at Kraken in 2018. And the entire founding team at DFDV was ex-Kraken. And so we, worked together mostly on the strategy team. And I held a number of roles at Kraken, some on the strategy side, some on the engineering side. And so in early, I guess it was February or January, February of 2025 of last year, we basically set out to build the MicroStrategy for Solana. And so that's what ultimately became DFDV and launched the first non-Bitcoin treasury company. This was back in April of last year. And, built a pretty successful business there. And for a while, we were the best performing stock on the entire NASDAQ for 2025, second to none. I think we closed the year as like the fifth or eighth or something best performing stock on the NASDAQ. So, despite debts kind of, dropping quite a bit in going into the end of the year last year, we were still one of the best performing stocks, overall. But, as our name would imply, DeFi Development Corporation, we're not, as a company, just content to sit on our bag of Solana and wait for things to improve. And so we saw, of course, what MicroStrategy had been doing with STRC. So STRC, for those that don't know, was actually the #1 largest IPO of 2025 of any kind. I know 2025 was a light year for IPOs, but the Stretch IPO was the biggest of common stock, preferred stock, anything. And so we saw what they were doing, and kind of early on, we're like, well, what if we create a stable coin backed by these instruments? And we saw, of course, Strive come out with SATA, and we're like, hey, this might end up being like a whole kind of asset class, these variable rate, non-perpetual preferreds. And then Saylor went on stage at Bitcoin Meta in December of last year and was like, someone needs to build a stable coin built on this or based on this. And so we, of course, jumped on it and we're like, all right, it's time to go. Let's build. And so started spending a lot of time working on Apyx, put together the team to, kind of do the development work and off to the races. So that's kind of a little bit of the backstory and how, DFDV came to be and how it's been real supportive of the, kind of Apyx launch. So I'll stop there. That's the backstory.
Awesome. Great overview. Yeah. And you kind of allude to it, but Apyx was spun up really, really quick. It's actually kind of remarkable, but yeah, it's been great just to see the protocol grow in a short period of time, and it's awesome that you're leading it, Parker, and just focusing on it full time. I will also just gas you up too, and to the audience and say that Parker is also, in my opinion, like very much like a polymath, just a man of many disciplines. It's pretty remarkable to say the least. But I'll stop there. Cool, Parker. So let's move on. Would love to get your take on price action of Stretch in Bitcoin over the past few days here. I think a lot of people are expecting, and maybe even some of the team, myself for sure, we were expecting Stretch to trade up more to like 97, 98 this week, but it hasn't quite yet come. What do you make of things?
Yeah. So I think a couple things are going on. Obviously, Bitcoin is down again, and it feels like, all hope has been completely obliterated. Everyone's calling for, 40K, 30K Bitcoin. Hey, it's got to drop below, the um, net unrealized profit loss, number, or it's got to definitely dip below the 200 week. And like, this is just, I mean, it's over, right? You've got, different Bitcoin factions fighting each other. Yeah. So I think this is like peak despair. Doesn't mean it can't, the price can't go down more. But like, this is, peak dejection, it feels like. I mean, just, I've not seen anyone other than just delusional bulls having, anything positive to say. So that's kind of the general, quote, macro backdrop for crypto. Now, I think obviously all of this stuff is exacerbated by the fact that, the NASDAQ and everything's doing great. And crypto is basically the only asset class that's getting crushed. And so it just makes no sense. And people are just, jumping ship left and right. So in the midst of that, as that macro backdrop, you've got Stretch, obviously a strategy, they spent basically half their cash buffer on buying back some bonds. The market did not like that. They can replenish it quickly. They raised 200 million off their common ATM last week. I'm sure they raised another, 1 to 200 million this week. But, there's some consternation around what strategy's doing. Why did they spend all this cash reserve after they said they would set it aside? It seemed like a bit of a departure, kind of people getting a little spooked. And I think the problem that you have right now with Stretch is that it's such a retail heavy name. And so, people are just like, well, Bitcoin's dead. MicroStrategy's, spent their cash, whatever. I want out. And so I think you just have a bunch of people like, retail folks that are just dumping at a loss. And I think there are certainly buyers at these levels, but not enough to overwhelm the sellers. And so it candidly might take a week or so to kind of churn through everybody who just is ready to throw in the towel. They're done with crypto, done with anything touching crypto, and they just want out. So I think some of that's going on for sure. We still got tomorrow. So tomorrow it could trade up. I expect it'll trade up more tomorrow. Maybe not all the way to 100, but I think it'll trade up above the 96 range that we're in now. But the instrument right now is trading right around a 12% yield. And so some participants, market participants, are expecting them to go ahead and raise their dividend and just get it to 12%, because that's basically where the market is pricing it at. So I think that's a reasonable assumption, and I would kind of expect that to happen if we keep trading here. But I am, I do recognize that this is like peak Bitcoin dejection, peak MicroStrategy dejection. So, they might decide to wait another month just to see if things improve, sentiment improves. Obviously, Bitcoin going back up to say 65, 70 would improve things quite a bit as well. So, they certainly want to get this thing back to par so they can get back to running the ATM and buying more Bitcoin, especially at these levels. But strategy certainly is a patient bunch and, aren't ones to just jump to attention and fix a problem that appears within a week or something. So, there's some general commentary. I do think it'll get back to 100, but, maybe it takes a couple more weeks. Takes them basically announcing a rate increase. Or, it could get back to 100 really quickly if Bitcoin kind of turns around from here.
A great overview. Yeah, just to echo sentiment, it seems like the timeline is peak despair, to say the least. I mean, just anecdotally, like I've seen, and yourself too, we've just seen like people seemingly throwing in the towel left and right. And I guess looking at the data, I mean, there's a few different ways to chop the sentiment in the market, right? There's the crypto fear and greed index. There's one that's Coin Market Cap has, and there's one that's like a legacy one, but both are kind of sitting around levels last seen in February. And then of course, before that, like, 2022, very, very much in the range of historical, bear market bottoms. So yeah, it'll be interesting to see what happens. Interesting times to say the least. Cool. Well, shifting gears a little bit to more protocol focused. Someone in the Discord community actually just an hour ago was like, whoa, APYUSD is now yielding 15%. How is that possible? So, Parker, maybe if you don't mind, could you just give the audience a quick rundown or a reminder? First, how is it even possible that we're able to offer more than what Stretch is offering, just currently 11.5%? And furthermore, how is it that we're at 15% right now when we've stated, our target is 13%?
Sure. So, the way that Apyx generates yield above that of Stretch is via the two token model. So we've got APX, we've got APY. APY is the staked version of APX. APY collects the yield from the entire basket of collateral. APX receives no yield. So you could imagine a scenario where the entire, and this is not exactly the case, but you could imagine a scenario where the entire balance sheet is invested in Stretch, paying 11.5%, and then 50% of the stable of apyUSD is staked into APY. So that means the yield to the APY holders is not 11.5%. It would be 23%, 11.5 times 2. Now, of course, we shave off some of the yield to help grow the reserve. And so that's why we only target, 13% and not, 22.5% or 23%. But during periods of unstake and outflows, what happens is people forego their yield, the unstake button. You enter the unstake, queue or process, and you stop generating yield. And so if users are, the users that are staying in are going to get a higher yield. And so that's kind of, what's going on here. It's kind of by design, protocol design, where as users unstake, everyone else who's left gets a higher yield. And, the interesting thing is this also is a yield based on the current price. So this is a, 15% yield based on the 96, 97 cents on the dollar price. And so when things, repeg, when Stretch goes back up, the yield that you're buying in at is better than the 15% because you also have that, couple percent improvement back to 100. So, protocol is working as designed, kind of anti-fragile as people come in. And, many of y'all saw this as people were piling in, the yield would sometimes drift down to, 7, 8%. And then this is kind of the opposite happening as people head for the exits. Yield is drifting higher. So, yeah, so basically what's going on.
Awesome. Great overview. Yeah. I mean, you mentioned it, some of the excess yield, um, or rather, maybe you didn't hit on it, but there is some of that excess yield that will flow to the protocol that is used amongst other things to cover OpEx. Um, there was someone in the community who said, they estimated that I think maybe monthly. I know they didn't say, but saying, oh yeah, saying that OpEx was 2 to 3 million per year. And they were just kind of generally asking, how is the protocol able to operate and pay expenses? And I don't know if they asked for a burn rate per se, but um, Parker, do you just want to kind of quickly comment on how exactly we are covering OpEx? And, I don't know if we have any numbers off the top of our head, but, maybe just give a breakdown as to some of the expenses that the protocol does incur.
Sure. So, we try to be very lean. We've got a couple engineers, really top notch, solid engineers, got a couple BD people, and then kind of the, some of the founding contributors. So a couple components here to keeping OpEx low. One is, for the engineering team being small and very high output. So not having to build out a giant team. So that's very important. The other one is having the experience of building projects before to not say overspend on legal or overspend on, certain other areas, marketing, so on. So that's another important one. And then a third factor is, some of the employees are not taking salaries. Sorry, I shouldn't say employees, but some of the, contributors and people involved are not taking salaries. And so that further allows us to, keep, keep burn to a minimum relative to say other bigger projects. So yeah, that's kind of some of the background there, how we're able to keep costs low. Obviously that then flows through to extra yield and reserve growth. So, we'll always kind of be cost conscious basically.
Yeah, I will. I'll also hype up and say the developers are top notch in many ways. Army of ones. It seems like some of these guys are just doing the work of a whole team at times, and of course, AI, has helped that quite a bit. Shout out to Fable 5, by the way.
Yeah, I mean, that's like maybe the obvious one, but like, I mean, there's so much you can do with these models now. We all run open clause. We have multiple open clause internally. We can cut down on legal expenses, obviously dev expenses, design work, marketing. I mean, there's, these models are, and the tools around them are allowing for the, single founder unicorns. And, we're not single founder, but like the amount of leverage that each person has utilizing these tools is just, wildly fantastic. So that's, I think, a very important part of the story and one that, I kind of take for granted. But yeah, I don't think building businesses is, ever going to be the same just because it's so easy to do so many things now with a simple keystroke or, little voice chat.
Yeah, it's remarkable, honestly, and it'll presumably only get better. At least that's what history seems to suggest. But TBD. Cool. And then I guess Parker, just to wrap up here, and just a quick reminder too for the folks in the audience, if you do have a question, don't hesitate to drop it before we wrap up here. But yeah, Parker, some of the dare I say gripes over the past few days has been centered around liquidity being added back. Honestly, at this point, maybe we start a meme amongst the community when liquidity. But yeah, we've got that question a few times today and yesterday. We did note, though, over the weekend, of course, we're adding the liquidity back, which we did on Monday. But any kind of additional commentary, anything we can tell folks to calm them down here or reassure them that, in fact, liquidity was deployed?
Yeah, it's very interesting. We've got liquidity up. We're using the limit order platform. So we've got some orders on CowSwap, some on Kyber, and then we also got orders on Kraken. But very interestingly, like no one's really hitting them. So I know people they're complaining about liquidity. They want it. It's there if people want it, where we'll reload the orders as they get taken. And every once in a while, someone comes in and, sells 100K or something. But um, it's almost like people just want to see it there. They don't actually want to use it. So we've got some updates to make to how we quote, and that'll allow us to quote, more size. But yeah, I don't know. It's just interesting that like demand for the liquidity, when the rubber meets the road, has not really been there. So we'll continue to quote and grow that. And especially once stretch repegs to 100, we can get back to having the 30, 40 million, on both sides curve pool. But, for the meantime, we're focusing on the limit orders and, providing liquidity as folks need it. But so far, it doesn't seem like a lot of folks want out, interestingly enough.
Cool. Can you actually hit on that too? What was the impetus between what was the impetus behind just moving the limit orders over to Kyber?
You mean away from like curve or something?
Yeah, we had just a few people say, "Hey, like, what the hell? Why are you guys now on KyberSwap instead?"
Yeah. So the problem with curve, being a standard AMM is that you can't really move the liquidity around um, easily. So when the price of stretch is moving around, you know, pretty fast, we need to be able to move the spots that we're willing to buy APX USD back at along with that stretch price. And so you can't really do that in curve. And so you just have to leave the liquidity in there and realize that like you're selling some, you're buying some, and hopefully it nets out. Versus the limit orders, you can be very explicit about the levels that you're willing to buy at and the amounts. And so we like the limits quite a bit for that purpose. And, once we can really automate the updates there on the liquidity posting side, we can certainly quote more size and a little more easily quote, nights and weekends.
Yeah, sorry, I was muted. Cool. Thanks for the overview. Just looking here, last remaining questions. I don't see anything. There was someone in the community who asked about the May 2026 Wolf attestation. I think it was supposed to come out maybe tomorrow, maybe if not tomorrow, late next week, or excuse me, early next week. But yeah, no official comments on that quite yet. We'll of course share with the community once we know. But it's very soon.
Yeah, they're just going through doing their checks this time around. We have stretch X in there, and so they're having to and these attestations are very rigorous. They want independent pricing sources. Candidly, one of the holdups right now is they need to be able to verify the rebase event from May 15th on StretchX. And they're like, we need to see the specific transaction on Etherscan, but it doesn't show up. And so we're kind of working through like how they can independently verify. But these guys take their independent verification very, very, very seriously. And so like, all T's have to be crossed, all I's dotted. And, it's candidly a more rigorous process than almost anyone in crypto undergoes. Most crypto projects have like, like exchange attestations where an exchange will just say like, yeah, look, the balance is here or whatever. But an attestation by an actual, PCAOB auditor that does public company work is pretty rigorous. So, anytime we add a new asset like a stretch X, they, need to dig in and it can take a little extra time. So just, bear with us.
Yeah, it's a lengthy process, but it's worth it. Very rigorous, but we're trailblazers here. We are trying to set a new standard in a number of different capacities, and the transparency on the protocol's assets is certainly one of them. So yeah, hang tight, folks. We'll get that out ASAP, and it sounds like it's right around the corner. Cool. All right. Well, Parker, look, I think that's it. Thanks for the time as always, and thanks everyone in the audience for listening, and especially those listening to the replay as well. As always, questions, comments, concerns, don't hesitate to drop them in the Discord. We'll do our best to answer, folks, and get back to you ASAP. We will run it back likely sometime next week, as we're trying to stay at this cadence of doing these office hours weekly. So be sure to bring your questions for then, and keep an eye out for the announcement. Cool. Thanks again, Parker. Thanks, everyone. We'll close it out here.
Thanks, guys. See ya.
Yeah.